patterns. By the way, let me mention on the side here that the market can reverse anytime it feels like it. Okay, so it doesn't have to have one of these two or any particular reversal pattern. So I find that traders often think backwards about this sort of thing. They think that these patterns make the market reverse, or that these predict the market's going to reverse, or the market can only reverse if it has one of these or a different reversal pattern, an official reversal pattern. Like it needs the permission of technical analysts in order to reverse a trend. You know, no, not quite. Like I said before, market's a wild animal, undomesticated. It's going to do all kinds of crazy stuff. It can do anything at any time. So what we're doing is we're just trying to find some high probability situations. The rest of the time the market's going to do all kinds of stuff and we're not going to do anything. We're only going to trade when there's an edge. And we define that as one of the setups based on our rules. Okay? So the rest of the time, you know, and this is where people chase the market. They chase trying to figure out the stock market or the futures market or the forex market. So they're trying to find, you know, some formula or mathematical calculation or indicators or pattern or whatever that will always tell them what the market's going to do, so they can be trading all the time. Every high, every low, every major reversal. Forget about it. Not going to happen. Doesn't exist. Okay? So I just want to make that very clear, very, very important point that a lot of people miss. And a lot of people who even say they know that still don't behave that way. So analyze yourself and see if you do. Okay, so in this video we're going to just review here a little bit the head and shoulders and the double tops, double bottoms, and we're going to analyze it based on where to get in and where to get out. Mostly where to get in. The entries is what we're focused on here. So with double bottoms, here's a double bottom, and there are basically, with both of these, they're actually both the same. Double bottoms, double tops, and head and shoulders. It's the same principles as to where you get in and out. I talked about it a little bit already in the head and shoulders video, but I just want to be clear because I can see this is one of those things where people will be asking me questions, and rightfully so, because it's very important to know where you get in. So you do need to know this. Okay, so first of all, let's just analyze this real quick and put in our support levels. So here's a nice extended wave. Okay, so now we're looking for some kind of bottoming pattern if we can find one. We do indeed. We get a nice failed 9. Therefore, this counts as a double bottom, not a lower low. By the way, the market could get a real lower low, put in a wave 9, and then completely turn around and go the other way without a head and shoulders and without a double bottom. So, you know, can do whatever it feels like. Although quite often what's interesting is that you will, if it puts in a lower low, then you will quite often get some type of head and shoulders pattern. It may not be, you know, textbook, but you'll get some kind of head and shoulders pattern because, you know, if you think about it, you're going to get a lower, you're either going to get an equal low, roughly equal low like this, or you're going to get a lower low and then a higher low. Now that's pretty much a head and shoulders. So pretty much what happens. Now, the only thing is, sometimes you'll get what they call V-bottoms, where the market will come cranking down, and then it'll just go cranking up. Or it might come down in a nice sine wave pattern, and then just go vertical up. So then you don't get a nice, neat head and shoulders pattern. You know, you get stretch it. I've seen people draw some pretty crazy head and shoulder patterns. I think they're trying too hard. That's just a V-bottom, and I don't trade V-bottoms because well, unless they meet some other type of criteria, but I don't teach V-bottoms because I don't find a high probability way to get in on them. Once in a while you get lucky by trading a different pattern and you'll get in on them, and then that's great. Alright, so anyway, there's basically 3 entries that we mentioned before, but just want to point them out again here for perfect clarity. So here, perfect situation for taking a reversal, again, we would check momentum and we would check the next higher time frame. I'm not putting those indicators on the chart right now just because they're not the point of this lesson. Sometimes people say, well, how come you don't have all your indicators on the chart? Because it's not the point of the lesson and you get distracted. I want to focus on just the information we need to make the point of this lesson. Okay, and I do that on all the videos. So we get a nice cycle low, we get a nice double bottom here on K, so this is a second chance pattern. We don't really get a strong candlestick reversal pattern here. This is actually an inside bar, so there's no strong reversal candlestick pattern until this one, and then of course, as often is the case with good strong candlestick patterns, it's too late. Your risk is too great. So, but you don't have that, but you don't need it, because these are crosshairs here, there we go, because this bar right here, K, is hooking up on this bar, so we would enter one tick in this case. This is the NQ, NASDAQ 100. So futures, so we would enter one tick above the high of that bar, because we have K hooking up on that bar, and that's a pretty good entry. And so that's your first entry. So basically, the first choice of entry is right at the cycle low. That's the earliest entry you can get, and personally that's the one that I usually take. Okay, I always try to take that one. I like to get in early. A lot of people wait for confirmation. Now the next two places are first of all the break of, oops, I got the wrong kind of line on there. Be the break of the neckline. We talked about before. Where's my, oh, we just want a line. Okay. Okay. Whoops. Okay. So what we're doing is, this is our neckline, the last two highs, and we're just drawing, we're connecting those two lines, those two highs, connect the dots. So the second entry would be here. Okay, let me actually, not too used to using this, don't use this too often, chart marker. So first entry, there we go. That's your first choice. Now your second one would be the break of this trend line. Right? And that, I don't take this one ever. I hate that entry. But a lot of people like it. A lot of people trade it. A lot of breakout traders. I don't like it because we're in cycle high territory almost every time that this happens. And so it just doesn't work for me. It doesn't resonate. We've already moved so far in that half cycle that, and we're still, you know, yeah, I mean, you could take that, I guess, but I'm not a breakout trader. Breakout trading does not resonate with my brain cells. So that's just me. You know, there's other people who do breakout trading and they're successful. So I'm not denigrating the style of trading. I'm just saying it's not my style. Now the third one would be to wait for the throwback, like we talked about before. So the first throwback actually occurs right here, gets above, and then comes back down. Now again, you don't always get a throwback, so this is considered a more conservative approach. It's pretty popular. The problem with it is you don't always get a throwback, so then you may not get a trade at all, but it's okay. Again, if your risk tolerance is such, then you just have to sacrifice that and say that's okay. I'll just pass on those and wait till I get a trade that does give me what I want. In this particular case, though, the cycle indicator does not make a cycle low. We're looking for it to come down here. This is your 20 line. And therefore, we wouldn't take that. Our cycle indicator, the next tradable cycle low, that is a cycle low, but it's not a tradable one. Next tradable cycle low, where K does come down below 20, is here, and so then you could trade that one. Right, so 1, 2, and either 3 or 3. Those are your 3 entries. Again, they're basically trading the low itself, or the breakout of the trend line, or the neckline, or the first throwback or the second throwback, depending on when you get a cycle low. And again, with any of these, you do need to have momentum on your side, and you do need to have the fractal energy on your side. Otherwise, you do not take the trade. You pass on the trade. Okay, but those are the 3 entries. Okay, now let's look at a head and shoulders, reverse head and shoulders actually. I'm going to do a long since we did a long on the double bottom. So here's our low, higher, well, low, high, low, high, low. Okay, so here's our head, there's our left shoulder, there's our right shoulder. And now, so where's our 3 entries? Well, our first entry is off of the head itself. So we could enter here. Or I'm sorry, actually we don't enter on the head. The head and shoulders pattern isn't formed until here. So we could enter here on the right shoulder. That would be our first entry on the first higher low. Okay, the first higher cycle low. Or the second place is we could wait for the break of the neckline. Let's draw our neckline in here. Okay. By the way, sometimes people ask me, well, do you draw the neckline off of the highs of the bars or the real bodies? That's up to you. There's, there's definitely some fudge room there for that. Again, the point is these will be support resistance levels. So like all support resistance levels, they are not exact. They're not really lines. They're zones. So if you want to, one technique you could do is do it off both. And then that'll actually create 2 lines, obviously, and create a little zone there for you that you can use. Okay, so our first entry would be the cycle low here, the first higher low. That would be the most aggressive entry, and that's usually the one that I take. The next one would be the break of this trend line. Okay, so that would be right there. And then the third entry would be what? Do you remember? The throwback. So it would be the next cycle low. You expect the market to come back to probably this support. It might get above the 50 MA and then come back down to the 50 MA. It could do that, but some sort of support level. And classic technical analysis says it's going to come back down to this level. Well, maybe it will, maybe it won't. And then enter there. That'd be more conservative approach. Okay, so let's see what happens there. Okay, so now it's come right back down. It's gone through the 50 MA. It's come to this support level. Okay, we got a little hook here, but no trigger. And oh, it's actually coming down. It's still coming down. Oh, you know what? Guess what? No entry there. So what happened, and that actually made a lower low. Didn't mean a wave 11. So this is a good example to demonstrate something. When we talk about a entry being more conservative, what we mean is probably it's you're waiting for more confirmation. You're waiting for more confirmation to see if that pattern is really, again, can't say it's really going to occur, but it has a higher probability of occurring. You're waiting for more evidence that that pattern is really happening. Here you have very little evidence. All you have is a lower low and a lower, or a lower high and a lower low. Okay, the head and shoulders pattern is considered confirmed when you break through this neckline. And then, so technically we would consider this confirmed, but then it comes right back down and actually makes a lower wave low. So by saying, well, I'm going to wait for the more conservative entry, it would have actually kept you out of this trade, which may be good. Now, to me, it wouldn't matter too much because I'm still going to get out at the first cycle high. So I'm lightening my load, I'm adjusting my wrist position. So as long as we get some range here on this half cycle, I'm still okay. All right, I'm still okay. May not make any money, but I'm going to be okay. And it comes down, and it even makes a wave 13. So in this scenario, first entries, possible entries here, the second one is here, the breakout, and the third, there is no third. Never happens. Never happens. You almost get it here and here, but there's no trigger. By the time you get down here, the pattern is broken. There's a lower low, so you no longer have a head and shoulders, so now that pattern's broken. Okay, so those are the 3 possible entries. Now in the next video, we'll talk about targets.